We buy or sell Mitek Systems. First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. Okay, we have a theme under the megatrends called Biometrics. 40% from the 52-week low, minus 66% away from the highs. So here is the theme, Mitek Systems. Yeah, we are 36 away from 36% away from the low, 42% away from the highs. So it is the best performing versus the highs, relatively speaking. Here is their website. Identity is evolving, stay in control. Instant ID verification, simple and secure at every touch point. I do think that biometrics it's going to be huge. But it's still an emerging industry. It's in the early phases, but that is when you find the biggest opportunities. There was a period where we had these very clean time cycles. You could go long, short, long, short. This major rise here and sell-off did sort of break the time cycles a bit. So here are the weekly data points, big picture. Overall, we do clearly have an uptrend. Historically, this stock can go on huge rallies and huge sell-offs. That also means that buying low for this stock can be very fun, but you definitively want to have stops. So after this extremely bearish sell-off, we had a rally, pullback, rally. We do have higher lows here, but will we have higher highs? That is the big question. When we go here to the daily data points, you do have this all important red 200-day moving average. It's a huge deal, and it has defined the downtrend. It was a prior support level that failed, and the 200-day moving average is the most watched moving average. There is some bullish activity here. We are really challenging that resistance level. It is also a declining moving average, so that makes it easier for us to just slip above it, which psychologically is going to be rather important. And looking at the RSI and the PPOs, we are not at dangerous levels on weekly RSI or PPOs. Looking at the daily data points, we are high, but we are not at like dangerously high levels. We have usually been higher in the past. Same thing with the PPOs. So basically the bulls, they have enough fuel left to get above that key resistance moving average and to do something more ambitious. So we are at 200 daily moving average resistance. I will give the bears a -2 on the technicals, but that is actually a very low score, weak score, given that we are at such a key resistance level. I do think that there's things happening here that could create a breakout. Let's look at the seasonality. So to the right here, we do get the seasonality over the last 5 years in green. The seasonality is pretty darn decent. Usually a bit more weakness, but then we see some pretty substantial strength into... Oh, these are weekly data points. But anyway, the seasonality here for the weeklies are good, but that's very long term. Let's look at the daily data points. In this case, yes, we do have bullish seasonality, especially leading into early December. So yeah, bullish. To the left, over the last 5 years, November is weak, but December is very strong. Over the last 10 years, so November is a 50-50 month, but with an average 6.5% gain. December is strong and the January is strong. So the coming months are strong. Over the last 20 years, from November and into December, we have some strength here for the stock. I will give the Bulls a 4 here on the seasonality. It was a bit messy, but overall it's better for Bulls than Bears. Let's look at the fundamentals. We have a one strong buy from Sachs. Style scores, D values, C growth, D momentum, industry rank, top 1%. That is pretty good. Computer optical imaging. There's no yield, no huge surprise there. Market cap 504 million US dollars. Let's look at the insider activity. We don't really have anything since July. Let's look at the consensus estimates. So we have 5 analysts covering the stock. Average price target is 53% above us, highest is 86% above, and the lowest is 15% above. I give the Bulls a 5 on the fundamentals. Interesting activity here, but there is some lack of data. But overall, bullish. Let's look at relative performance. We have long-term 76% correlation with S&P 500, 78% with the tech ETF XLK, minus 19% with the 10-year yield, and minus 60% with the dollar index. Short term, 76% with S&P 500, 70% with tech ETF, 34% negative with the 10-year yield, and 45% negative with the dollar index. So, what happens with this tech ETF is going to have a pretty substantial effect on Mitek. Yeah, we are above the 200-week moving average. It was extremely buyable here and here. We almost tested it again this week. It's good that support is holding, but I'm not a huge fan of support levels being continually tested, okay? Because that suggests that there are bulls around that moving average, but we seem to lack bulls higher up, and we need, those bulls higher up, to push the ETF higher up. That's how it works. But overall, this is more bullish than bearish, but the bulls need to really get, assertive. They can't keep testing a support level. That's dangerous. Here are the daily data points. Let's look here. We are getting a bit of an inverse head and shoulders pattern, a shoulder, head, and a shoulder. That is a bullish technical pattern. But we need to rally pretty darn soon. However, we can't keep, testing bullish levels. We need to go up. Let's look here also at the daily data points, a bit in sort of no man's land here. Let's compare Mitek with XLK. So this is, showing whether one is outperforming or underperforming the other. We are emerging here from a low level for Mitek, so it has outperformed the tech ETF now ever since May of 2022, this year. Looking at RSI, we are approaching a territory where we usually start to see Mitek underperform the XLK. So that is a bit of a potential issue. Now let's look at the seasonality here. Waiting for data. Yeah, here it comes. So Mitek usually outperforms the tech ETF into late November, but then we do tend to see some systematic underperformance. And in terms of relative performance here, it was a bit messy, but short term, there could be some good times for Mitek. We end up with a 2.5, and this is also a bit of a quirky case where we have a technical resistance level in play. However, other data points are bullish. we have some time left. Let's look at some of the stocks in the tech ETF XLK. We start here with Apple, relatively big tech company with a messy chart. We are, however, back down to a horizontal support level. Support here, support, some support even back here. That's interesting. Um, but we do have a rounding top pattern as well, but there is horizontal support for Apple. Here on the daily data point, so we could make a case that this is a bit of a potential double bottom. That's also bullish. So yeah, interesting for Apple, but a bit of a make or break situation, because if Apple starts to go down, then yeah, it will be pretty tough for the XLK. Apple is 23.4% of the XLK in terms of holding. Here is Microsoft accounting for 21%. That all important red 200 week moving average is in play. We did, however, see the bears push us slightly below it this week. We closed higher, but it's a bit of a shot across the bow here. But we are still holding on to that support level on the dailies. Yeah, pretty clear downtrend, the lower highs and lower lows. Now looking at RSI weekly here and the PPO, the 20-week PPO in purple, we are at a level that usually is pretty buyable here for Microsoft. So this is a bit interesting. Yeah, another potential bullish support opportunity. So if Microsoft and Apple were to create some to trigger some buyers, then that could help out the XLK for sure. Next on the list is Nvidia. On the topic of the red 200-week moving average, in this case, you see that we were below it for a month, but then we are soaring above it. And this week, you see that we went down here to test for support, and this is almost surgical support at that moving average. The next major battleground is definitively this purple 20-week moving average, a very clear resistance level. Let's look here at the dailies. Yeah, the blue 100-day moving average is very, very, very clear. Let's look at the RSI and the PPO, because they tell us whether we are at risk of becoming overbought or not. We are very far from being overbought on the weekly RSI and PPO, which means that the bulls, they don't have any reason to panic yet. On the daily RSI and PPO, we are a bit elevated. We can go a bit higher though. And back in the day, we did establish much higher RSI and PPO levels. So yeah, I think that the bulls, they should be able to recruit more bulls. Now it gets weird because Visa is considered a tech company. So here is Visa. What a messy chart. This is just a mess. Yeah, daily as well, just very, very choppy. Very choppy. This is definitively one of those stocks where you want to buy after a dip. Yeah, just too messy. Let's go to MasterCard. A very similar chart, frankly, for MasterCard. So I just prefer to avoid noise. Unless I want to trade, a short-term trade, then of course noise is good, because then you can easily just put on a position, and sometime in the future, whether you are long or short, you are likely to be able to go into your account and close out the position with a profit. But it's just noise. You sort of sit there without really a theory of why things are happening. So here is Cisco. This is a very well, it's a tech company. It's one of the pioneers in the tech space. In this case, yeah, I mean, we are at an interesting level. There is some noise in this chart, I would say. Looking at the daily data points, on the dailies, it's less noisy, because you have the blue 100-day moving average, which was resistance, and this week we tested it very surgically as support, so that's good. So when it comes to Mitek Systems, there is an interesting opportunity here. Even though we are still below our resistance level, in the tech space more broadly, there are opportunities, and if those bullish opportunities come to fruition, then that will help Mitek Systems. So yeah, go to diamondarm.com to get more data because very exciting things will happen on that site soon.